General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Now that we got Monday down, we can get some more levels. Monday was kind of a large range. I kind of would be like, oh, here's an inversion, see if this is interesting. I don't think we need no new levels. This gap stands out for sure. And that's it, really. Let's see here. We kind of got the same thing here with this gap. It's a fresh gap. It'll take out liquidity. I like it. This area right here, well, besides this new week opening gap, probably gonna be the most interesting thing. We closed here and we opened here. Mm-hmm. What are these levels? Why does it look double right here though? Okay. And then lock this and then let's put this one on. We closed here. And then we opened here. And lock that. I don't know why, but that band is thicker than the rest of these bands. And it kind of bothers me. Yeah, it'll be alright though. Okay, we hit previous day's high, and then that was it. Filled the gap. That was it. Let's go here. We didn't hit previous day's high here, so that's SMT. Let's make it dashed or something. Still look bullish. Still looks like we can go up in here. Interesting areas would be OTE vibes. Let's extend line to the right. Let's go 50% to 79%. Let's lock this. So here we don't got the SMT, but we still got the retracement idea. $50 handle. Okay. Let's knock out one day's work. Thinking the war stuff will be done in a pretty reasonable manner. Being that, like, he got 90 days before he got to go to Congress anyway and get it approved. So they got 90 days to do this war. They saying like 2 weeks or whatever on the internet. I still don't have the swing trading pair yet. What color is this? That way it just looks cleaner for the screenshot. Unlock. Him here. Damn. Here. All right, cool. And know how we got. Can yeah. I mean, I like this because it lines up with my low hanging fruit. I would want to sell really above previous week's high. I don't like selling in the middle here. Day one of the week, we gap down and completely fill the gap. The market is readjusting to war. So, I mean, you really can't call it a war, but it's really like you don't want to start using all those politically correct, nice terms that they try to use to redefine stuff. That's what they do. They'll say conflict to make it sound like like it's not that bad. But it's organic. It's what humans do. Okay, cap fill currently at 50% of previous week's range, which I don't like. Buying would be OTE. That's interesting. Selling will have to be here. If we get a reaction. This would be a good area to buy. Let's go blue box. Yeah, this is fair value for buying. And it's in discounted range. You know, everything's laid out. right here in this middle of this range, so I don't want to do anything. Even though we swept that high, so I'll probably just wait. Best way to deal with something like that is just set alerts. And don't even look at it until you get an alert. Like we're here, but we're here. Then it'd be like, okay, slow up a swing on Forex. I like sales premium of previous week's range and buys from discount of Monday range and fair value. Oh, right now we at 50% previous week's range, so we should expect chop and order blocks to be created to push us to previous week's high or low, most likely low. We go look at CNN fear greed because the market went up on fear. It's probably don't know, like people trying to buy the dip. CNN fear and greed index. It was 44 last time I looked. Okay. Yeah. A month ago they were greedy. A year ago it was extreme fear. 20. That was tariff. Because it's March. Yeah. Come on. See, I'm trying to get a screenshot. Just had like a little bubble around it. I could put my notes and stuff, but fear actually went down. It was 44 a couple weeks. Weeks ago. Look at last year. It was 20. So even with all the drama, we still are closer to neutral. And we are closer to extreme fear. Neutral. That's natural. The market is less fearful than the media. Let's go here. Still in this range. I'm not interested in that. This is pretty interesting now. Seemed like it kind of stopped price. Mm. Then this looks like, okay, it is a sweep. I do remember that. I will look for this tomorrow because we got this week high too. 2026 open prices, low hanging fruit. Look for higher prices tomorrow. We could short squeeze this week on spot. I mean, buy in Nasdaq was really how they had it set up. Makai. Spot was more bullish though. But Spot didn't even take the high. This is about retracements. Watch it now for the immediate catalyst with the war going on. To be in and out. Let's go here. Okay, we got a blue box here. Going down here. I would want to see this hold this low. Should be a push up. We close through this. It's possible the price would be Fiji falls for the week. They want to push this thing up. It'd have to be some bad news to push it down. Look at this. We just leaving lows. we looking for now. All right, that's that on that. Y'all have a good day. Peace.